Hey guys, what's up? This is Francisco with Valareso Capital, and on today's video, we're gonna go through the market update. It's been a while since I do a market update video for the channel here, but I was on vacation with the family. I actually had an amazing time with the family. It was a great way to recharge and get ready for the next move that we can expect on the market. It's actually a pretty amazing thing that I actually went on vacation and we are actually starting to see some direction in the market after quite some time of consolidation after the huge gap up that we had on the first CPI announcement, and then after getting the second CPI report in which we actually see some improvement in the battle with inflation. We actually see quite kind of the opposite reaction in which we actually had a gap up and then we had a sell-off. So I think it's actually pretty amazing that I'm coming back right at this moment when the market actually is breaking to the downside, but it's actually taking some direction. And we as traders and trend followers, what we want to see is direction. It doesn't matter if the direction is up or if the direction is down. As long as we have direction, we have opportunity. So always remember that. And of course, even if we also have a sideways market and we have some chop, if we have defined ranges, there's also opportunity. So basically there's opportunity always in the market, so always be aware of that. First of all, for this video, what you can expect for this video, we're gonna go through the volatility instruments that I watch, and then we're gonna go through the market. We're kind of gonna go into a deep dive of my indicators so that you can understand what is my expectation for the market. I actually think that the Santa rally is over. So as if you have been following the channel closely, you know that I was pretty bullish going into December, but after these weeks and last week's action after the CPI report, that thesis completely changed, and I'm going to explain the reason, and we're going to go through the charts. So once again, guys, remember that this video is for informational purposes only and is based just on my personal opinion and is not financial advice. So let's start here with the BBIX. Let me just grab my drawing tool so we can get this video started right here. So here we go. So here's the BBIX, and so anyone who doesn't know what the BBIX is, or the BBIX, basically is the volatility of the VIX. So you can think as the BBIX as the VIX of the VIX, right? We have the VIX, which is the VIX for the S&P, and the BBIX is actually the VIX for the VIX. So what is actually pretty interesting about this instrument is that usually, many times, the BBIX is gonna give us a very important you can call it roadmap of what actually we're gonna see in the VIX. So if you've been following the channel for some time now, you know that the two indicators that I use is the TTM squeeze, which is the one located in the bottom, and then I use the trend oscillator, which is the one located in the middle. The TTM squeeze is to find moments in time where there is a lot of volatility contraction. So we usually see the contraction before expansion in price, and then the trend oscillator is to find the highest probability trend that we're gonna see in the market. If we are above the 50 line, which is this midline right here, then we're most likely gonna see continuation to the upside. If we're below that midline, then we're most likely gonna see continuation to the downside. And in terms of the moving averages that I use in my charts, I have the 8 exponential moving average, which is the yellow moving average in my charts. I have the 21 exponential moving average, which is the light blue moving average. Then I have the 30-day, or you can also use the 200 hourly. This one right here is the 30-day, which is exactly the same, which is the pink one. Then I also have the 50-day, which is the purple one right here. And then I have the 200-day, which is the blue one right on top. So let's start with the BBIX. What I'm seeing is pretty clearly, what I'm seeing is that I actually have a buy signal in the BBIX. So you can see that since we had the rally that we saw in the market, especially in the Dow, in the DIA, which is the Dow Jones, you can see that the BBIX was trading below the moving averages, but most importantly was trading below the 50 line in the trend oscillator. So that meant that there was the highest probability was to see continuation to the downside in the BBIX, meaning that there was a high probability of seeing continuation to the downside in the VIX, and therefore highest probability of seeing continuation to the upside in the S&P. So it sounds kind of confusing, but you just have to see the pretty colors in the chart, and what we are seeing right now is actually quite the opposite. You can see that the BBIX is trading above that midline of the trend oscillator, meaning that there's a highest probability for continuation to the upside in the BBIX, and you can see that we are now above all the moving averages. You can see that we are above the 30-day, we're above the 21 exponential, and we're also above that 50 daily moving average, which is the purple line. And what actually happened today is that we are starting to see some pullback into support in the BBIX. I wouldn't be surprised if we see a little bit more of a pullback into the 30-day moving average, or perhaps a little bit into that second standard deviation for support. But my expectation is that even if we see some pullback in the BBIX into this area right here, we're probably going to see more upside. The targets that I'm watching to the upside are going to be this 100 area right here, given the psychological value of 100, and also the 0618 retracement measured from this high right here all the way to this low right here. So that's what I'm watching in the BBIX. This is actually telling us that we are starting to see some trending properties in this instrument, which is actually not very bullish for the market. Now let's take a look at the VIX, which is going to be the normal VIX, which most people know. And what we have here, you can see that the BBIX is already trending to the upside, right? And the VIX is actually not, at least for the time being. However, given what we're seeing in the BBIX, my expectation is that we're going to see some kind of change here in the VIX. I cannot confirm it right now because we don't have it in the charts, but that's my expectation. And one very important thing that I want to point to is that we are starting to see the develop of a squeeze in the VIX. And anytime we have a squeeze, we have a pretty strong move in either direction, right? We had a squeeze here, we had a pretty strong move, we had a squeeze here, we had a pretty strong move, and then you can see the pattern, and then you can see the pattern in the, then you can start to see the pattern actually in the VIX as well. So that's what I'm seeing in the VIX. I think that we're gonna see continuation to the upside in the VIX. And that's my expectation. I do have some levels here that I want to share with you. And the first one is going to be the 0618 retracement right here. The 0618 retracement is measured from this low right here into this high right here. What is actually interesting is that this low that we have here came actually into a very important level of support, which was 19. And this level of resistance here came into a really important level of resistance, which was the 50 daily moving average. Given that we are starting to see some support around this area, my expectation is to see the VIX continue to chop a little bit until we can get above these moving averages right here. Once we get above those moving averages, I think that's going to be the indication that a very strong move in the VIX is what we are ultimately going to see. And my target is going to be all the way up here into this 28 level, given that we have some very important levels of Fibonacci resistance. So that's what I'm watching in the VIX. So the next chart that we're going to see is going to be the Nasdaq Composite. And what is actually really interesting about here in the Nasdaq Composite, and this is something very amazing about the indicator, especially the trend oscillator indicator, and how they work so amazingly well with the TTM squeeze. So after seeing what we saw in the VIX, after analyzing that, let's try to find something that correlates with that kind of analysis in the Nasdaq Composite. And I think it actually shows a pretty amazing correlation that suggests that we're going to see more upside in the VIX. So let's start right here. So you can see that first of all, we're starting to see a squeeze, right? This squeeze is starting to fire to the downside. As you can see that we have our first green dot in the indicator. That means that the energy that's being released, we can call it energy, is actually being released to the downside, meaning that And in just simple terms, sellers are winning the battle between the buyers and the sellers. So sellers are in control, meaning that they're starting to push the price to the downside. You can see that after we went above the moving averages, we actually had a pretty extended time of consolidation above the 50 daily moving average. However, this is the part that I want you to pay attention to. You can see that on this day, it was on this day right here, we actually had the CPI report. The CPI report came lower than expected, meaning that we actually saw a decrease in inflation. That was actually pretty bullish to the market. However, we can see based on the price action of the day that was actually already priced into the market. So what I want you to notice here is that we got the gap up, we got the close near the lows, but most importantly, we had a bearish divergence right here in the trend oscillator, meaning that we actually had a higher price but a lower high in the indicator. And that is the first clue that this move that we actually saw was not being supported by buyers. And the moment that we actually broke below the 30-day moving average, you can see that we had a pretty strong move to the downside. So remember that saying is, when we see a failed move, we then see a really fast move in the opposite side. And that's exactly what's happening. Now, what is the expectation for this week? You can see right here that we are stopping at the 0618 Fibonacci extension. This extension is measured from this low right here to this high right here. My expectation is that we're going to actually see a bounce in the market. That bounce is most likely going to be a shorting opportunity. So my expectation is to see a bounce all the way into this resistance level of 10,910. That's going to be the level that I'm going to give you for the Nasdaq Composite. If we happen to see a bounce into that level, I'm going to be looking for shorting opportunities for then see a continuation to the downside to close this gap right here all the way to 10,353, and then probably we're going to see a continuation to the downside and then lower lows in the market, at least in the Nasdaq Composite. That's going to be my expectation for this chart right here. And then if we take a look at the SPY, we're going to see something pretty similar. You can see in the SPY that we have the squeeze, and most importantly, we have the bearish divergence, meaning that we made a higher high in price, but we actually made a lower high in the indicator. So that's the first clue that move was not being supported to the upside. You can also see that we're starting to find some support at the 1618 extension, also measured from this level right here to this level right here. Also, what I think is really important to notice is that this move in the SPY was actually finding resistance at the 0618 Fibonacci retracement measured from this high right here all the way to this low right here. We were not able to went above that level, meaning that the trend to the downside continues to be in play. And also, if you watch moving averages, you can see that the 200 daily was right there at that level too. Now, should we expect lower lows from here? That's actually a tough question because we actually don't know if we're gonna make lower lows. However, what we do know is that for now we have a squeeze, we have a bearish divergence, and we have a sell signal in the charts. So what that means is that I'm going to be looking for the same thing in the SPY as I'm looking for the Nasdaq Composite. I'm going to be looking for a shortable bounce that's going to come into resistance, and the level that I'm going to be watching is going to be 391.64. If we happen to bounce to that level, I'm going to be looking for shorting opportunities in the SPY, targeting the gap that we have right here at 374.13. That's going to be the first target to the downside, and then of course the next target is going to be a move all the way to test the lows that we actually made on the month of October. So that's going to be the expectation in the SPY. Any bounce, I think, is going to be a shortable bounce in the SPY. And then one of the charts that look a little bit different is going to be the DIA. And of course, the DIA has been the leading sector that we had in the market, especially in this bear market rally that we saw. However, what is actually pretty interesting is that we have the same setup, right? You can see that we actually have a higher high in price, but we actually have a lower high in the indicator, meaning that we have a bearish divergence and that we are starting to see a squeeze that is starting to fire to the downside. what is actually really important to understand is that right now the Dow Jones is at a very critical level of support. That level of support is right here at the 50 daily moving average and the 200 daily moving average. The expectation, however, is going to be the same. The expectation, given that we have a sell signal and we have a squeeze, the expectation is that we're going to find some buyers here, and that most likely we're gonna bounce into resistance, and the resistance and the level of resistance I'm gonna give you in the Dow is gonna be 335.25. If we happen to see a bounce, I think it's gonna be a dead cat bounce, and it's gonna be an opportunity to short for an ultimate target all the way down to close this gap of 310.88. And what is interesting is that that level actually is pretty similar to the retracement measured from this low right here all the way to that high right there, and that level is going to be 310.15 in the retracement. So the expectation for the market is that we actually going to see some kind of bounce, but that's going to be a shortable bounce, at least based on the system that I'm showing you, and is a system that I have developed over these last 3 years, and I have found a lot of success using it. So one last thing that I want to show you is going to be the net lows and the net highs. And what is actually pretty interesting, and this is something that I want you to understand, is that when you are starting to see some important level of consolidation, meaning that we actually trading inside a box. When we're trading inside a box, a way to understand if that box is actually a distribution box or an accumulation box is going to be using these net lows and net highs. You can see clearly that all the time that we stayed in this range, we actually continue to see an expansion in the net lows of this indicator, meaning that even though that we were trading sideways, participants in the market were willing to continue to make 52-week lows in most of the stocks in the market compared to 52-week highs in the market. So that's actually a pretty important indication and distinction to make, so that we can understand what is happening under the hood of the market. And then of course we are now seeing a direction being taken in the major indexes. So I think that we can keep it really short for this time around. I don't think that we have to see anything else to understand that the market is kind of seeing a turn here. I think if we just keep really focused on these major indexes and we also keep an eye on the VIX, then we're going to be really fine however this market wants to trade. Because remember that even if we happen to see another leg to the downside, as long as we understand that the path of least resistance is to the downside, then we're going to be okay, because we either are not going to get into any long setups, or we're going to participate in those short setups as well. So let me see that I don't have anything else to share. And that's basically what I wanted to share with you guys. So thank you once again to be here in the channel, guys. I'm happy to be back. I'm going to be looking to make a weekly watch this video for this week. I think we're going to have a lot of opportunities in the short side. So I'm going to start to scan the market to find these opportunities. And of course, I'm going to share those opportunities with you here in the channel. And also remember to follow me on my Twitter account, at Valeriso Capital, in which I also and in that account I also share my daily views in the market, and I also share basically all the setups that I'm watching. So thank you once again, guys. Take care, stay safe, and bye bye.